Oh, no, that's a great question. Where the money comes from inside the stock market. Well, when we look at the stock market is composed of what we call public companies. Now, there is something called private companies, such as Publix and also Chick-fil-A. These particular companies, they have private investors. And normally you have to be what we call an institutional investor or an accredited investor in order to invest into certain companies if you haven't gotten in at the earlier start of these particular companies. But public companies trade on the exchanges, and these are public exchanges. There are many, like the New York Stock Exchange, the American Exchange. So there's multiple exchanges that these public companies trade on. Now, the reason why they're public is because these companies have to display their public data, their information, the ownership, the amount of money the ownership is making, right? And then particular statements like the income statement, the balance sheet statement, and the statement of cash flows, which is information they have to produce every quarter and also on an annual basis. Now, these public companies, people take a private company and they take it public a lot of times. And the reason why they do this is they give up ownership, i.e. equity, through common shares or stocks to individuals and or institutions, and they receive their cash, receive their money to reinvest back into the business and continue to grow. And some people just do it to actually cash out. So now a stock price can actually goes up based off the amount of people willing and ready to buy that particular company, which can drive the stock price up. Similar thing in economics that we learned, which is supply and demand. And that's where the money comes from in the stock market.